Hope you all had wonderful, joyful Thanksgiving. Welcome to our webinar. Today, we're featuring one of the best, if not the best, digital asset management company in the world, Bitwise. They are, as many of you know, are a good friend of ours and a consulting client of ours. Today, we're featuring Matt Haugen, who is Chief Investment Officer, who brings an incredible wealth of knowledge in ETF, trust, and frankly, any methods to make difficult assets readily available to retail and institutional clients. Previous to Bitwise, Matt was CEO at Insight ETF, Managing Director of Global Finance at Informa, and before that, he was also CEO of ETF.com and has co-authored the CFA Institute's monograph on ETFs. In short, I challenge you to find someone more knowledgeable about ETFs and trust than Matt in the world. He will talk about his firm Bitwise a bit and some of the new exciting products that are out there. And we're also joined by David Levant, who is Director of Research. David is a former II ranked analyst at JP Morgan. He also co-authored the CFA Institute's monograph on ETFs. So we are well equipped with gentlemen who know a lot about ETFs. And finally, the webinar will be emceed by my colleague, Sean, who heads up our consulting research at Fundstrat. There will be a Q&A at the end of the presentation. You can ask a question using the Q&A button at the bottom of your screen. If you have further questions that we didn't get to and would like to inquire about investing in any of Bitwise products, feel free to contact us. You could also contact Brian Raimondi, who heads up sales at Bitwise. As usual, we will send out replay information. And as always, on behalf of my colleagues and our friends at Bitwise, we are grateful for your support and business. Feel free to email us or your sales rep with any suggestions or thoughts. And I will now turn the mic over to my colleague, Sean. Thank you.
So don't want to monopolize anyone's time. You know, Matt and David have plenty they want to share as it pertains to the latest developments at Bitwise. But, you know, before that, just want to reiterate some things that we have discussed internally with our with our clients and our subscribers, and kind of the way we have seen the industry progress over the past few years. We've become this crypto has become this institutionalized asset and a fortified asset class as opposed to this passing fad. We started back in 2009, but in the mainstream, we started with Bitcoin as this decentralized monetary asset. Ethereum came along, providing a means for economic productivity in a decentralized manner, and more or less functioned as a decentralized economy with trust and value secured in the form of code. And recently, we've seen other decentralized economies come into the limelight. We think of the Solanas, Avalanches of the world. You can think of these as competing economies. And now finally, we're even starting to see developers start to build on top of these economies, build on the application layer, and actually effectively grow the GDP within these economies. And so now that we're at this place where we can actually invest and people understand the value proposition of this decentralized world, crypto assets, it is an institutional asset class, and people are looking for ways to gain exposure. And while most investors prefer to select and hold individual crypto assets on their own time and do their own research, a lot just prefer to gain exposure through traditional financial rails. And, in my opinion, this is where Bitwise comes in and offers a very key piece of the crypto asset puzzle. They'll talk about what they're offering more now, but they started out in 2017 with their flagship Bitwise 10 large cap index, which is a market cap weighted fund, which offers clients exposure to nearly 70%, 80%, depending on when you're measuring, of the entire crypto market cap. They went on to offer a slew of individual asset funds, a DeFi specific fund, and now most recently an ex-Bitcoin fund, which allows investors to achieve exposure to these other more emerging crypto assets, not named Bitcoin. So without further ado, I'll turn it over to Matt and David to discuss this more in depth and advise everyone here on what Bitwise is and what they're doing and where they see themselves providing value in this space.
Thanks so much, Sean. Thanks so much, John. And thanks everyone for joining us today. Really excited to be there. As mentioned, my name is Matt Hogan. Pleased to be joined by my good friend and colleague, David Lawant. As Sean mentioned, we're going to talk about the world beyond Bitcoin today, the more productive corners of the crypto economy. One of the things that I absolutely love about Fundstrat is how they help clients stay on the cutting edge of what's next. So not just Bitcoin, which is now mainstream discussion among traditional asset managers. There's now a futures-based ETF. It's a big, well-understood product, but the more interesting corners of crypto. And we're really going to try to break down what separates Bitcoin from Ethereum, from Solana, from the other assets. Why is DeFi occurring on Ethereum and not on Bitcoin? How will Solana and other assets compete with Ethereum for these new worlds of Web3, NFTs, the metaverse, and DeFi, et cetera? This is the agenda we're going to run through. Who is Bitwise? Why do you need more than one crypto asset? And how to compare and contrast different crypto assets? How we build indexes to capture that, to make it easy for people who don't want to try to pick and choose winners, who just want to own the space. And then we're going to talk about the two new funds that we've launched that give alternative and novel approaches to accessing the broad-based crypto ecosystem. We're going to answer a lot of questions, so be sure to submit your questions. David and I love answering questions. I'll make David take all the hard ones, and I'll take all the softballs, so you can tilt them that way if you want to. David, if you want to go on, I'm going to do 3 minutes on who is Bitwise. The team from Fundstrat did a great job introducing that. We love being partnered with Fundstrat. But for those of you who aren't familiar, David, if you go to the next slide, as mentioned, Bitwise is one of the largest and most established crypto asset managers in the world. We've been in the market with funds since 2017, so a nearly 4-year track record of managing money for institutional and professional clients. We now have over $1.7 billion in assets. We're best known for having created the world's first crypto index fund, the Bitwise 10, which, as mentioned, captures about 70 to 80% of the market. I think institutional investor and Bloomberg referred to it as the S&P 500 of crypto. But we've gone on from there to develop additional products, the DeFi index fund, the ex-Bitcoin index fund we're talking about today, and some single asset funds as well. The other thing we're well known for is this kind of education. David and I were fortunate enough to write the CFA Institute's first ever guide to Bitcoin, blockchain, and crypto. We try to take sort of a skeptical optimist view to this market, presenting both the incredible opportunities, but also the risks. And we're going to walk through those things today. This slide's out of date. We're now a team of 50 professionals. We're growing very quickly. And we continue to iterate in this market. Next slide, David. Two more slides about Bitwise. A little bit about our background. I do think it's important when you're investing in crypto that you do so with trusted partners. And we've tried to build a team that conveys that depth of expertise and trust to you. You see our 6 executive leaders here. The important thing to download from this slide is that we really come from 2 important backgrounds. If you think about an asset like crypto, it is a 2-piece thing. There's the Bitcoin asset that you invest in and the Bitcoin blockchain, which is a piece of software or technology. And in order to understand crypto, you both have to understand the asset management characteristics as well as the technological characteristics. And that's reflected in the venture capitalists that funded us, as well as in our executive and the rest of our staff. What you see here, our two founders came out of Silicon Valley, firms like Google, Facebook, Instagram. The rest of us come from traditional asset management perspectives, firms like BlackRock, JP Morgan, Goldman Sachs, Deutsche Bank, New York Life, ETF.com. Again, we're trying to marry those two sides of the world, deep expertise in technology, deep expertise in asset management. So we present best of class on both sides of the ledger. The last slide about Bitwise, which David will show you now, one thing that stands out from us is we're really set up to support clients, professional investors, individual investors around the country, not just in understanding the space and allocating to it, but in staying invested in crypto and staying up to date on what's going on. We're one of the few crypto firms that has a nationwide sales team, representatives in every category, every part of the country. I'd encourage you, if you have additional questions after this webinar, whether it's about Bitwise or about crypto in general, download this slide, reach out to the people in your territory. They will get back to you immediately with answers to your questions, helping you understand the space and contextualize what's going on. That's the end of the Bitwise intro. One last slide. Yeah, we do a lot of education, as I mentioned, but I want to turn it over to my colleague, David. Let's get into the meat of it. Answer this core question for us, David. Why do we need more than one crypto asset?
That is a great question. Thank you, Matt. And thank you, John and Sean. It's great to be here again. So we have a lot to talk about crypto, and let's start with this discussion, why there is more than one crypto asset in the market. I will start our discussion assuming that everyone has heard about Bitcoin, which I think at this stage is pretty fair. Everyone has heard how Bitcoin is great as a potential disruptor to gold, as this digital gold asset. But now we're going to be spending the next few slides in this presentation saying and answering the question of why there is more than one crypto asset in the market. We're going to be addressing things like Ethereum that most have heard of, but also things like Solana and all the other crypto assets and all the other major crypto assets that make up for such an interesting space. And the first thing I want to start with is that usually when we think about different crypto assets like Bitcoin or Ethereum or Solana, a lot of people think about them as different currencies. They think about them as the dollar or the euro or the yen. And I think this comes back from this analogy and the terminology of cryptocurrencies that has been with the market since the beginning. But actually, we think that the best way to think about these is that they're actually assets, and they're very different assets. And the best way to think about them is to think of them as different software companies. So here you see the logos of 6 software companies. There's Microsoft, Salesforce, Google, and a bunch of other companies here that I'm sure you all recognize. They are all technology companies. They're all software companies. They're all companies that use software in one way or another to solve a problem. But they are different in that they either solve different problems or they use different strategies to solve the same problem. Sometimes they're direct competitors. Sometimes they don't even compete directly with each other. And I think this is the best way or this is the best framework to have in mind when you are thinking about different crypto assets. So just like we have 6 logos of 6 different software companies here, now I'm going to shift the slide to the logos of 6 different crypto assets. You probably recognize the logo on the top left, which is Bitcoin. Most of you will recognize Ethereum, which is the one to the right. It's the one in the middle here off the top row. But the other logos, they basically are from other crypto assets that are either solving different problems. Some interact with one another. So throughout this presentation, we're going to go through a little bit of how these different networks or how these different assets are actually solving different problems and what are the major design decisions that are behind them. And let's start with Bitcoin. I mean, I don't want to spend too much time on this. As I said, I'm sure everyone here is familiar with Bitcoin as this very strong competitor to becoming a digital gold, of becoming this censorship resistant monetary asset. But the important thing about Bitcoin is that there are certain design decisions and there are certain design trade-offs that were intentionally thought of when Bitcoin was being created. And Bitcoin's goal is very clear. It optimizes for being the most secure and the most decentralized network. I don't think there's today any other network that competes with Bitcoin in these two attributes. The thing, however, is that in order to optimize for these attributes, which are very important for an asset that wants to be something like digital gold, Bitcoin had to accept a few drawbacks that come with these design decisions. And basically, the trade-off that the Bitcoin designers were willing to take was to first accept slow throughput or slow speed and cost of transactions going on in the network, and also accept limited functionality. And I'll talk a little bit more about that in detail, but by limited functionality, what I'm meaning here is that the types of transactions that you can do in the Bitcoin network are relatively simple. You cannot make the complex smart contracts that other networks can do. And this is basically embedded in the design trade-off that came about with the Bitcoin network being the way it is. So then it comes Ethereum. Ethereum sprung up about 6 or 7 years ago. Actually, the creator of Ethereum, Vitalik Buterin, he used to work at Bitcoin, but then he realized that he wanted a network that could do something that Bitcoin was not able to do. And this something is the ability to do smart contracts, or the ability to do more complex transactions than the ones that Bitcoin can do. As I mentioned, you can do direct payments with Bitcoin. You can do slightly more complex transactions that will look like an escrow account or like a trust. But the creator of Ethereum, he wanted to do something that is called in the industry Turing complete, or something that you can basically program just like a general computer, and that you can execute anything that you can reduce into a computer code, anything that you can execute in a computer that you could be able to execute on the Ethereum network. And that's basically Ethereum's main value proposition. So basically what we're showing here is that Ethereum is not accepting limited functionality as a trade-off, but also, on the other hand, it is definitely a network that is not as decentralized as Bitcoin is. So the creator of Ethereum, or the creators of Ethereum, they came up with this idea, which is like, okay, I can be a little bit less decentralized than Bitcoin is, but in exchange, I'm going to be able to do all these type of transactions that Bitcoin by design and by intentional design cannot execute. So that was Ethereum's path to prominence. Over the next few slides, I want to talk a little bit more about the history of Ethereum and how we got to get to these assets that today is worth something around $500 billion and has a market cap that is about half of Bitcoin's. And Ethereum's first killer feature was asset issuance. This is something that started mostly in 2017. It kind of fizzled out as well. There was it operated in a relatively uncertain regulatory environment. This is a market that doesn't exist anymore, but this was the first innovation that Ethereum brought to the market. So the ability of creators or token creators to issue their tokens on top of the Ethereum network. Not very different from a project, from a process like the listed companies do in their IPOs. This is something that came about very strongly in 2017. It also fizzled out, but I think it was an important fundamental step for us to see the other more sophisticated and interesting use cases that happen on Ethereum. Then we started to see Ethereum being used to process stablecoin transactions. So stablecoins are crypto assets that are pegged to a fiat currency, most usually the dollar. And a lot of these stablecoins, they were issued on the Ethereum blockchain. Instead of, at the time, it was mostly Bitcoin and Ethereum. They were the two larger assets. And a lot of the stablecoin issuers, they chose Ethereum as the network where they wanted to issue their stablecoins. And this is a big market. So today, this is a market of over $100 billion. Most of it happens on the Ethereum network. Now things start to get really interesting. This is Ethereum's third killer feature, which is the rise of decentralized finance. Decentralized finance is something that rose to prominence very strongly over 2020. And today there's over $200 billion of capital allocated, or we call capital locked, in decentralized finance applications. And this is where we start to see Ethereum being used to its full potential. These decentralized applications are basically software that execute complex transactions, such as trading, such as borrowing, such as lending, such as derivatives, insurance, and even some simple types of asset management. So these is one of the big breakthroughs in Ethereum, and one of the things that really showed to, I think, mainstream investors how Ethereum can be used for day-to-day applications and the real use cases of the Ethereum network. Decentralized finance is still one of the most exciting corners of the crypto industry, and most of that activity today happens on the Ethereum network. And now we're at a stage when we're starting to see Ethereum applications being developed in other areas. Most of you have probably heard already about NFTs. These are non-fungible tokens or digital assets that can be owned just like a physical asset. So a lot of effort has been applied into developing works of digital art that are registered on the blockchain. This is a market that is relatively new. It actually has been going on since at least 2017, but it has rose to the mainstream audience pretty recently. And a lot of that activity is also happening on the Ethereum network. So a lot of these artworks, they are actually smart contracts. There are smart contracts that are executed in something like in the Ethereum blockchain, and that's what makes them so special. A lot of these other artworks, they are basically use the blockchain as something like the registrar's office and kind of gives a proof of authenticity to whoever is the owner of those artworks. And there's a bunch of other new applications that are being discussed on the Ethereum network. I'm sure that most of you are aware of Facebook's rebranding to Meta, and this idea of the metaverse, which could have pretty strong associations with crypto, in the sense that something like maybe your possessions in the metaverse would be crypto assets and things like that. So Ethereum has started as this abstract smart contract platform, and over the last many years, it has kind of blossomed into these general platform that can execute all these services that today there's a lot of people using. And I think that's what has been fueling the rise of Ether, the digital asset, and the market cap of the Ethereum network. Oh, this is just one more slide here, just to talk a little bit more about the rise of NFTs and the idea of Web 3.0. What you see here are the applications that are consuming most of Ethereum's resources, most that are generating most revenue. And the interesting thing is that if you look at the three applications that have been generating more revenue, one is OpenSea, which is an NFT marketplace. The second is DYDX, which is a DeFi decentralized exchange. And the first one is Axie Infinity, which is a crypto NFT game. So today you can see that Ethereum, there's a lot going on Ethereum, a bunch of different applications. And I think just looking at the level of revenue that a lot of these protocols are generating. Some of these protocols are generating revenues that are in the billions of dollars per year. So let's think about a little bit more into how Ethereum is different from Bitcoin. And this is another very key way in which they're different, in that as Bitcoin optimizes for security, the development that goes on the Bitcoin network tends to be a little bit more conservative than in platforms like Ethereum. So Ethereum is definitely likes to experiment more than Bitcoin. This, of course, comes at a cost, and the cost is that the Ethereum blockchain is probably a little bit less secure than the Bitcoin blockchain. The Bitcoin blockchain optimizes for security because it wants to be this apolitical, censorship-resistant store of value, and that's a very good attribute, very important attribute for that use case. But for the Ethereum use case, the ability to experiment more, the ability to be able to apply this Silicon Valley mentality of moving fast and perhaps breaking things once in a while is something that is important for Ethereum. And I think it kind of explains why we saw a lot of these more recent trends like DeFi and NFTs also happening on the Ethereum blockchain. But then, and this is my last slide, I'm going to pass on to Matt after this. But then we started to see other networks that are competing against Ethereum. In this case, we're going to talk a little bit more about Solana. And the thing that happened with Ethereum is that all this success that we saw happening on the Ethereum network made the Ethereum network a little bit clogged, a little bit congested, or a little bit overcrowded. And the effect of that is basically that fees started to get a little bit more expensive. So today it's relatively expensive to transact on the Ethereum network because there's just so much activity going on Ethereum, and there's just so much competition for that computing space that users who have lower value applications end up getting priced out. The fees are just too high for them to be able to process their transactions on the Ethereum network. So based on that came Solana. And Solana is mostly focused on processing more transactions per second. Solana is about faster and cheaper transactions. And again, we're going to see a different design trade-off here. Solana accepts to be more centralized than Ethereum is. But on the other hand, it is able to provide transactions that are a lot faster and a lot cheaper than Ethereum can produce. So the idea here was just to introduce this concept of different design trade-offs and the main attributes that different blockchain networks optimize for. And with that, I'll pass it back to Matt so he can talk a little bit more about the index and their constituents at a broader perspective.
That's great, David. Amazing. I think that's a really incredible framing for how to think about this space. I know a lot of people look at the 14,000 crypto assets that exist there and scratch their head and wonder why there's more than one. Why do we need more than one internet currency? And I think as David showed, there are important design trade-offs and different assets are optimized for different specific purposes. I'm going to talk about the Bitwise 10, which is our large cap index, as one way of viewing this space holistically. And then we'll talk about how to slice and dice it and the products we provide that allow you to make bets or investments in this market, depending on your thesis. These are the current 10 constituents of the Bitwise 10 large cap index. These are the assets that pass our institutional screens, but are recognized by the market as the largest. Many of them David touched on: Bitcoin, Ether, Solana. Many of them you may have heard of, but we didn't get to. David, if you go to the next slide, I like to break down the index into three main categories. The first category is Bitcoin and its competitors, which are Bitcoin Cash and Litecoin. These are assets that share a similar technological view, which is to have a limited programming functionality in the interest of increasing decentralization and security. And they compete largely for the same general use case. Bitcoin optimized to be a digital gold with some payments attributes. Litecoin and Bitcoin Cash, variants of Bitcoin that are optimized to be more useful or easier to use or lighter to use in the payments use case. But that's one corner of our index that you can group: Bitcoin, Litecoin, and Bitcoin Cash. The next grouping in our index really starts with Ether, and that's the more useful general purpose blockchains that can be used as the infrastructure for DeFi, for NFTs, for Web3, for the metaverse, as David so eloquently described. There are 4 members of this group in the Bitwise 10. There's Ether, Solana, Cardano, and Algorand. David walked through the differences between Ether and Solana. Cardano and Algorand are other variants of that. General purpose blockchains that are trying to do certain things better than their competitors as a way of angling into this field. And then the last group of assets, which David will highlight here, Chainlink, Uniswap, and Polygon. These are assets with specific use cases. So unlike Ethereum or Solana, which are general purpose blockchains, things like Uniswap or Polygon or Chainlink solve very narrow specific problems. Chainlink is an oracle that other blockchains use to talk to the quote unquote real world. As if a blockchain needed to find out the price of IBM stock, they could do that through Chainlink. Polygon is a layer 2 solution that's designed to work in parallel to Ether and allow it to process more transactions. Uniswap, as many of you know, is a decentralized exchange. You can think of it as a decentralized Coinbase. David, if you go ahead to the next slide. What this chart is looking at is the year-to-date returns of those 10 constituents. Now, this chart is hard to interpret because that left scale makes it look smaller than it is. That scale is the percentage return this year for the top 10 constituents. And it says 0 to 150, but what that means is 0 to 15,000%. In other words, that top performing asset there, which is Solana, is up about 12,000% on a year-to-date basis. The next asset, Matic, is up, it looks like 8,000%. That green line, which I believe is Cardano, is up around 1,000%. And even that little smushed piece there at the bottom captures a dispersion of return that's measured in hundreds of percent. The reason this chart is really important is because these returns directly reflect the situation in the market and which assets are achieving product market fit. David mentioned that one of the biggest stories in crypto right now is that the Ethereum blockchain is congested. All the growth in DeFi, NFTs, etc., have increased the demand for Ethereum block space, and the fees to use it are up thousands of percent on a year-over-year basis. Those top 3 assets, Solana, Matic, and Cardano, represent 3 different solutions to this congestion problem. Solana and Cardano representing alternative blockchains, and Matic in the middle representing a layer 2 scaling solution that it can exist alongside Ethereum. In other words, these assets are up because the market recognizes that the Ethereum blockchain is clogged and they're rewarding assets that solve that. On the far bottom, the worst performing asset there is Litecoin. As mentioned, Litecoin is like Bitcoin, but more useful in retail settings. People aren't using crypto in retail settings today. So the market hasn't been rewarding Litecoin. David, if you go to the next slide, this is another way to look at that variability of performance. This is a Callan chart. You've seen this before. This traces the top 10 assets month by month in the Bitwise 10. What you see here is that even on a monthly basis, the dispersion in returns between the top 10 assets is massive, over 74% in October between Matic up 67% and Cardano down 7%. To almost 50%, 45% in September, with some assets up, some assets down, over 200% in August. You can see in any given month, there is a very wide dispersion of returns. And unfortunately, there is not one asset that always sits at the top of that pattern. I'd encourage you to find an asset, find a color, and trace it through the chart. And you could see that the top performer doesn't consistently repeat. There's no serial correlation of returns throughout this chart. Maybe the best looking asset on this chart is Ethereum. If you want to follow that across, it's always been in the top half over this year. Otherwise, there's a lot of variability. David, if you go to the next slide. This is maybe the most important slide we'll present. The reason that we love index-based strategies so much is it's so difficult to know who will win. I could tell you right now that Solana can process 50,000 transactions a second and ETH can process 30 transactions a second. And you would think that Solana is going to crush ETH. And certainly that's been the story we saw reflected in those charts. But it's equally true that Ethereum is going through a technological upgrade that, should it work, will allow it to scale to exceed Solana's capacity potentially in the next year or so. There are also layer 2 solutions that could create an alternate pathway for Ethereum to continue to scale, or another asset like Algorand could emerge. It's just very, very difficult to know exactly who the winners will be today, even for people who are in this 24/7, 365. Our view is the easier bet to make is that this space will be more important in the future than it is today. That rather than trying to pick and choose ETH versus Solana versus Cardano versus Algorand, or Bitcoin versus Litecoin versus Bitcoin Cash, why not just own the entirety of the market? One more slide, David. That's core to our thesis. Our view is that crypto is a sort of once in a generation technological breakthrough that allows money and finance to exist on the internet. It's highly unlikely that all the applications of money and finance and digital property rights are going to be perfectly solved by any single blockchain. There is no platonic ideal of a blockchain. Every blockchain has optimizations one way or the other. And so the world that at least I see in the future is one where there are a handful, a dozen, maybe a few dozen of very valuable blockchains. And the index approach we take is designed to capture that. I have just a few more slides and then we'll move into Q&A. One thing we take very seriously here at Bitwise is designing our indexes to be fit for purpose. You might think from saying something like a market cap weighted index that we just take the largest assets reported on coinmarketcap.com and invest money in them. And unfortunately, crypto is not that easy. Crypto is a frontier market, and a naive approach to allocation would lead you into some very difficult circumstances. We follow a rules-based methodology that's been in the market for nearly 4 years, backed by an index committee, which includes the top representatives from Bitwise, myself, Hunter Horsley, our CEO, and David, Director of Research, as well as an index advisory board that includes the former head of indexing for S&P, the former head of indexing for Bloomberg, and one of the leading venture capital experts in crypto, to ensure that our index design is informed by a deep understanding of this market. And if you go to the next slide, David, what that means is that, as I mentioned, you will not see a naive representation of the top 10 assets as reported on a data site like coinmarketcap.com in our index. One thing that David and Hunter and I spend a huge amount of time on is screening out assets that may have significant risks that aren't well understood by the market. An example of those risks: assets that you can't custody with a regulated insured custodian. Another example: assets that don't have sufficient liquidity to ensure that if you get in, you'll be able to get out. A final example: assets that may be at risk of being deemed in violation of federal securities laws. Now, we don't take the position that we can determine if an asset is in violation of federal securities law, but we do take the position that we can work to screen out assets that may be at undue risk. XRP is, of course, a good example here, currently facing a lawsuit from the SEC for being deemed a security. It's the 7th largest asset on coinmarketcap.com, but it does not appear in our index. In fact, you have to get to about asset 22 before you get to our index. One more slide, David. The last thing that's really important, and I would keep this in mind as you think about assets like Solana that emerged from very low valuations, is that we reconstitute our index every month to ensure that it's always up to date. So as new assets emerge, assuming they pass all of our screens, they enter our index at the end of each month. We'll be reconstituting our index in a few hours, I think, for the November reconstitution. So it's coming right up. David, let's go to the last few slides and then we'll move into the Q&A. We did want to talk to you about 2 new ways that we've brought to market recently to get exposure to crypto on a broad basis. If you go to the next slide, David. One of the things we've done, our first version of the Bitwise 10 Crypto Index Fund, the $1 billion plus fund that many of you know, trades under, shares of it trade under a ticker BITW on the OTC market. Like GBTC and other OTC traded trust, these shares can trade at substantial premiums and or discounts. Currently, shares are trading at a discount. They've historically traded at a premium. That's a feature of the trust that cannot be avoided, and we can't forecast whether they will trade at a premium or a discount in the future. One thing we've brought to market is a non-OTC trust version of the Bitwise 10 Crypto Index Fund. This is tracking the same index, but with a few differences, and only available as a private placement to accredited investors. But one difference is it allows you to access shares at the net asset value and exit shares at the net asset value. And then the next slide, David. The other one that we're really excited about is the Bitwise 10 X Bitcoin Crypto Index Fund, which is available as a private placement. As the name suggests, this tracks everything on our index outside of Bitcoin. And that's important because Bitcoin is more than 50% of the Bitwise 10 index. Many people already have exposure to Bitcoin, or they're interested in the more sort of useful categories of the crypto market, the ones that Sean and John were talking about earlier, Ethereum, Solana, etc. This fund is designed for that purpose. It starts with Ethereum and goes down through the next 9 largest assets and lets you make a bet alongside or instead of a core allocation to Bitcoin. That's been on the market for a little while now, and we're very excited about that product as well. David, next slide, please. I think we've gotten to the end. Thank you all for listening. I hope it was helpful to break down how different assets compete, how they're optimized, and why there isn't one crypto asset or one blockchain to rule them all, and some of the index-based approaches we take to helping people invest. But I guess we can open it up for Q&A from here.
So I do see a couple of questions on the, discount to NAV issue. I don't know if there's anything else you have to elaborate on that. It does seem to be kind of a mysterious mechanism across the investment product landscape, but to the extent you could elaborate on maybe the drivers behind it.
Yeah. The way that those products are structured for regulatory reasons is that they don't have a redemption feature. And so the price of shares on the secondary market is determined by supply and demand. There are so many shares that exist and so many shares that are eligible for trading. And the premium or discount against NAV is determined by the level of supply and demand. I think as we announced publicly this weekend, that product is currently closed for subscriptions, but it does continue to trade. We are still 100% committed to the product, but we can't forecast where those premiums or discounts would go. We would love, Sean, to have a traditional ETF covering the Bitwise 10, and someday hopefully we'll get there. But today what you have is these OTC traded trusts, and they have this feature that it's really important people understand.
There are several questions relating to the criteria involved in selection. A couple people pointed out Polkadot specifically, their top 10 asset. I think someone mentioned Avalanche and a couple of others that by a market cap perspective are top 10 assets and seemingly decentralized. Could you maybe either touch upon the criteria once again for admission to the X Bitcoin Fund and the other funds, or maybe I know you have resources that detail it more granularly.
Yeah, I love Polkadot and Avalanche. Big fans of both projects. David, do you want to talk about the screening process that goes into the index and where those 2 assets stand?
Yeah, of course. More than happy to. And as Matt said very well during the presentation, I think the idea of the index is to represent the crypto market from the perspective of an institutional investor. So we have a number of a number of filters that we screen assets for, and Matt has mentioned some of those. I think the most important are probably exchange support. So there's a list of exchanges that we curate, and we need the assets to be supported by at least 2 of these exchanges. We also curate a list of custodians, of institutional grade custodians that we need to see support before we are able to add an asset. We have other screens for things like liquidity. We also screen for technical risk. So if a protocol is facing undue risk of technical nature, this is also something that the index committee has the ability to act upon. For the case of both Polkadot and Avalanche, and I totally agree with Matt in that these are 2 very exciting products, very exciting protocols. The thing, however, is that the index committee was not able so far to be comfortable with these 2 specific protocols from a regulatory standpoint. So the committee, we have a pretty thorough process for evaluating each one of these assets. And this is something that can definitely change over time. It's something that we monitor on a constant basis. And as Matt said, we meet every week and we review all these assets that are not yet allowed to join our index. But in the case of Polkadot and Avalanche, basically the rule that has been holding them back a little bit for now is the regulatory risk.
There are a few questions here related to purchasing or investing with Bitwise from overseas accounts. Are there any options you provide as it relates to offshore accounts?
Yeah, we would love to have that conversation with you. We do have an offshore version of the Bitwise 10. If you just want to email Brian, he can connect you with the right folks, or even just investors@bitwiseinvestments.com. But we do have offshore solutions.
Great. Yeah, and obviously, if you inquire through us, we're happy to direct our clients to the right place. So, cool. So we'll keep going. We had discussed. I discussed this briefly. David touched upon it as well, as in Matt. But there are these several different themes emerging. These applications that are being built on top of these layer 1, layer 2 sidechain protocols. Are there any plans, or more broadly, do you guys have any perspectives on developing thematic funds, perhaps for, say, the metaverse, or similar to your DeFi fund?
Yeah, well, I can start and you can add in, Matt, if that works. And I think the answer is a resounding yes. I mean, we're always looking for different and interesting corners of the crypto market that makes sense and that are big and sustainable enough for investors to have exposure to. Our DeFi index fund was the first DeFi index fund in the market. And although I can definitely not talk too much about our pipeline, I can assure you that we're looking into some other very interesting corners of the crypto industry. The thing is, we have to work with counterparties, with the whole regulatory environment, get everything right before we launch a fund. But I do believe that people should expect to see us coming with more thematic products.
Topical question, especially given the launch of the first ever futures Bitcoin ETF. What is Bitwise's stance on ETFs? I mean, I know the answer, but are you actively pursuing an ETF? And Matt, I know you and David, you've put out some pretty good research as it relates to future versus spot ETF. I don't know if you want to comment on that.
Absolutely, Sean. Yeah, we love ETFs. I worked for ETF.com. It's one of my favorite things in the world. I think they're phenomenal products. We would love to see a spot Bitcoin ETF. We would love to see a spot Ether ETF. We would love to see a index-based spot ETF. And we actually have a filing live with the SEC right now for a spot-based Bitcoin ETF. We submitted more than 150 pages of novel academic research in support of that ETF. We think it's a differentiated filing, and we're hopeful to get a positive review. Our view on the futures-based products is that they have a role in the world, but that role is limited. The futures-based products are good solutions for two types of investors. One is an investor who has no other way to access the crypto market. And the second is an investor who's only allocating for a short period of time. And that last one is the more important one, Sean. The issue with futures-based products is that they run into the issue of contango and extra costs. And so the long-term carrying cost of a futures-based ETF can be 5 to 10% a year or more. And that's just a major headwind that you don't need to take on. Investors would be better served by a spot product, and we're hopeful that both the industry gets a spot product, and of course, selfishly, we're hopeful that we're first. But we continue to work on this on a regular basis, and I'm more optimistic than most people that we could see a spot Bitcoin ETF in 2022. I don't think the window is closed permanently, and I do think we're getting closer all the time.
Great, but in the meantime, obviously Bitwise offers other options for achieving crypto exposure. I think that is most of the hard-hitting questions I could find. I thought this was phenomenal. Not sure if you guys want to offer any closing statements, but look, this is innovation in real time, and it's exciting to see this Bitcoin fund being launched, because in our view, we're headed towards a multi-chain universe in which the demand for block space is not going to slow down. It's just going to expand. And I think there's room for several layer ones, layer twos, roll-ups, side chains, and corresponding applications to develop and grow. So I'm excited about it.
It's hard to add anything better than that, Sean. We completely agree, and we appreciate the chance to spend some time with you and the Fundstrat community to talk about these new funds and why we think that is the future as well. So thank you so much.